Morning. Boom, boom, boom. Hey, good morning, everyone. It's another dumb prediction day, ADP, which is the Wednesday before non-farm payrolls. It's typically a scalping opportunity. I think they're looking for about $1.80 on that, which is less than before. So I suggest we do technical and fundamental analysis. Get ready for that. Get ready for the trades. It's a new month tomorrow. So that offers certain opportunities, new pivot points and such. Lots to be grateful for. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So hello, my name is Wayne. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Been trading currencies for a very, very long time, and I am here to share that experience with you with the hopes of helping you become a success sooner than later. So we consider it a symbiotic relationship. Traders Way invests into making these events happen every single day. And one day, when you do feel like you have the skills and confidence to trade real money, you'll choose Traders Way as your foreign exchange broker. Pretty simple, right? But maybe, hopefully, the relationship is powerful. Trying to get lots of sleep, and I wake up more and more tired every day. Does anybody know of like some vacation retreat in India where I could sit and just, I don't know, drink tea and eat cucumbers and meditate all day? All right, so yeah, let's get going. Typically, if we're looking to front run a move here on Mexican peso, it'd be about now. You probably would have already done it, maybe. This is supposed to take place the first of the month, just before, just after. First of the month being a Thursday. That's a great peso day. And then, of course, non-farm payrolls on Friday. That's also going to move this one way or the other, of course, based on dollar strength. But it's not looking great so far. It isn't really going up, but it's not going down either. And remember, what I was hoping for was a drop to the 4-hour 21, and then sort of a double top, and then a drop. Well, I can't really say that that's happening, right? So, wait, I suppose. Front run means be in it before it happens. Ozo, right? OSHT. Okay. I've Googled it. Oops. Now I've lost my chat because of that search. There we go. All right, thank you, Jazz. Do they have good whiskey and cigars too? Now I've lost my chat because of that. I mean, that goes without saying. All right, thank you, Jazz. Do they have good whiskey and cigars too? Can we cover USD Swiss franc? Yes, that goes without saying. Yes, we can. All right, thank you, Jazz. Okay. So anyways, that's just sort of disappointing. But look how strong this move is. I wouldn't turn my back on it. tomorrow is the repatriation day.
So anyways, that's just sort of disappointing. But look how strong it is. I wouldn't turn my back on it. Tomorrow is
and for those who what do you call it? Front running means you're in the trade before the trade happens.
And for those
because you anticipate the trade is going to happen. It hasn't happened yet.
Front running means you're in the trade before the trade happens.
And for those because you anticipate. So, for example, entering a trade on Friday, which you are supposing will take place on Monday.
So, for example, entering a trade on Friday, which you are...
Oh, I know what you see. Hang on. I'll fix that. It had to do with when I searched for the meditation retreat.
Trade on Friday, which you are...
Oh, I know what you see. Hang on. There. That should be fine. Okay, so that should be fine. I stink. Yep. Let me know. Yeah. Okay. All right. So good. We got that taken care of. So anyways, that's too bad. I'll jump right into USD Swissy. What? And we want to look at it just like that. Okay. Looking at it from down in here, we had 2 levels of resistance. I'm not sure why that one, huh? I guess it was a pivot. It's not typically a pivot, but you can see this thing rallied up like nobody's business. Okay. And we're already through the month. Well, it's the last day of the month, right? So the projected range for the month is this if you're bull. Okay. And you can see we spent almost the entire month in that range, so that worked out pretty well. So now we got to update this, and right, because you can't front run what you can't see. So I am going to change this so we can see next month's. Okay. So for the people that asked, what does it mean to front run? It means, why won't this resize? Anyways, it means that you're planning on future pivot points. Okay. Nothing has happened here. But if it did, you could put a trade plan around a little top up and then there. Now, if you're a bull, you want to buy down here anyway. So that's the interesting thing about these potential reversals is even bulls want it to come down. And a lot of people say, well, what do you mean, Wayne? Why would a bull want price to fall? Because professional bulls buy low. Right? Well, the amateurs buy high. So a professional says, okay, they've been bullish all day or all month. Now it's time to take some profit. And because they take profit, it comes down and then they buy it again. So one way of thinking of it is bulls bought it up, took profit, bulls bought it up, took profit, bulls bought it up, took profit, bulls bought it up, took profit. Okay. So be careful about, how you sell it though. Okay, because this is bullish, so it's very difficult to sell a bearish. It's hard to sell a bullish market, right? So you better have some sort of reasoning. If you're treating it like a double top or something, that's fine. Okay. right? See all these things? Even though we've just been talking about a sell, the only reason I bring up the sell is the monthly pivot, right? And that's where a bear would sell. So it doesn't mean it would sell, okay? So how would a bull really respond to this on the smaller time frames? Well, they're going to want to buy at support. So you got to identify these levels, okay? So you can see someone actually bought that. And in the beginning, I'd rather you be a bull in a bullish market than a bear in a bullish market, right? But nonetheless, this is a little buy zone in here in the future. And then, of course, the big one is down here in that future. Okay. Okay. So let's be clear. On the long run, I want you to identify the direction of the prevailing trend. Okay. So you might say, Wayne, that to me looks like up. Okay, great. Doesn't mean it has to go up now. But I prefer you identify and say, okay, this looks up to me. And then from there, set up bullish trade plans. And bullish trade plans can occur on all time frames. So on a 4-hour chart, we have this one, let it drop and buy it here. And then the next one is here. Those are two bullish swings, but on a much higher time frame. On a 15-minute chart, there's a lot that can happen by the time it gets down to here. So this is why price action is still prevailing here. The market has not reversed. So selling a market that has not reversed yet is a bit tricky. Okay? So you might want to let it prove to you first that bulls are getting out, at least on the short term. I think you can get into a lot of trouble when you say it's been up for 6 weeks in a row, so now I want to sell it. I'd rather you say, all right, there is a bit of resistance here. Okay, we definitely have a top. We definitely have the pivot. So now I'm putting together trade plans, okay? And that would be looking for double tops and then lower low, lower high type scenarios, right? Okay. What you don't want to do in the long run is have a career where you're just saying things like, I bet you this resistance holds. Okay. There's got to be more to it than that. If we get to resistance and then on smaller times you see it roll over, then you start building a move. There might be one trade here and a second trade after a lower high. So, oops. Okay. I don't want to mess with this, but anyways, that would be very bearish too, wouldn't it? Well, that could be a second trade. So you could have one trade here, second trade here, so on and so forth, working your way down. And even then, even though it's fallen, let's say for 3 days or 2 days, it's fallen all the way down to this, you should already know that this is where bulls are going to start buying it. Okay, even if you're a bear, this is probably going to come all the way down here, and then probably all the way back to this resistance, and then probably try to start a reversal down. Okay. I wouldn't be shocked at all if it went all the way down. Let's try to draw this. Gee whiz, how many times do I move? Okay. It drops all the way down to here. Let me give it an extra click. Okay. And then it just double tops. Okay. So you might have, 3 trades selling it down, 3 trades selling it up, 6 trades selling it down. Okay. Because a double top on a 15-minute chart is not the same as a double top on a 4-hour chart. A double top on a 4-hour chart takes like a week. Okay. But yeah, you're definitely at resistance, right? Okay. I'm only suggesting that's half of a trade plan. That's strategy. You're like, okay, we're at resistance. I want to sell. Okay. If you just went sell, then you're gambling. Now you're supposed to use technical analysis on a small time frame to start chipping away at that strategy. Okay. Was that helpful for the USD Swiss franc guys, or do you have a more specific question? Nothing wrong with that resistance. But once again, that's only half of a trade plan. That's strategy only. Controlling the urge to gamble. Yeah, Joe. And so just like, don't punish yourself. Just say that's strategy, right? You got to learn how to kick down doors. That's all. Oh, well, scalp. Sure. You can scalp anything. Okay. Well, for example, start using price action. The very least, if you want to be a bear in a bullish market and you're at the price you want to be, okay, that's cool. But now you should also look for things like lower lows and lower highs. It's just simple price action. Right. I'm supposing that you've mastered price action at this point. Oh, right on, Low. Make sure you leave an Amazon review, huh? There hasn't been one for a while, I don't think. I'm glad it wasn't the worst book you've ever read. There's a funny review on there. Someone's like, yeah, I picked it up in a bookstore and I've thumbed through it and it sucked, so I put it back on the shelf. I'm like, and then you went to Amazon.com, logged into your account, went to my page, and then posted a review that you didn't buy it and you thought it sucked. I'm like, wow, that's amazing that Amazon allows that, huh? So I'm glad every once in a while somebody doesn't think it sucks. I didn't know you had to be a professional writer to be a professional trader, so I must have misunderstood. Oh. Yeah, it made the worst book ever written, like the second worst book ever written. I'm like, dude, I never proclaimed to be a writer. What did you want? Prose? You wanted iambic and iambic pentameter? In sooth, I know how to trade the euro USD. In sooth, I know how to trade euro U. No, that doesn't work. I know how to trade euro USD. See? Iambic pentameter. Yeah. So anyways, look, we got this up. This is just hasn't actually done anything since the last time we looked at it. Well, I suppose not making higher highs is something. Japan did pretty well overnight, didn't it? I wrote a book that's enough, right? What do I want to do? I don't want to be a book writer. It's all right, Ray. Up, 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 down, down. Now we're caught up into here. Not really a 21, so let's check this. And this is kind of not right in there. Yeah, yeah. Right? So it's all right. I think if we make a breakthrough here, that's going to be very significant. But I do, as you know, I do anticipate the yen pairs going up. We set up a whole bunch of double bottoms. Remember that? How many did we set up? Like 5 double bottoms, and I think 4 of them have worked. Okay? Right? So that's kind of sticking with your bias, looking for your price, all that kind of stuff. Pretty neat. So entering in here, the only thing you really had was like London Open, right? But are you guys ready to trade at market opens? Are you ready to trade? Like, obviously this time of day is for New York, but like when you look at this, yesterday when we did our analysis, we were in here. Okay. And then this is London Open on a much smaller time frame. I'm going to get accused of having too many lines on my chart. Let's see if we have the brain power to handle that. Right? Then all it's done while we waited overnight was retrace, and then London Open, boom, gives you your role reversal. Right? Resistance, support. And, you know, that's just a day trade, guys. Also notice that you're using the psychological level of 80. Okay. But to me, that's just like a day trade or like a swing trade of the day, you know. Fourth week of ranging. Yeah, well, to me, I was hoping like it would create like a J-low, a big wide bottom. Remember, I want up. Okay? That's the whole thing. And you guys know that even though it did this huge collapse in October, well, you know, happens. I still want up, right? And then I want this to rise for 8 weeks, and then I'm going to sell the heck out of it. So, you know, it just comes down to if you were a buyer, where would you buy? Okay? And since we breached this level here back in the first week of October, so that didn't take very long, the plan switched to, instead of trending up, we need to form a bottom. Okay? So now at the end of the month, it starts to form a bottom and a higher high and a higher low, and then higher high and higher low and higher high, higher low. I would turn this, if I were a bull, that is, right? Right? Like to comment, respond to comments, Chuck. If I were a bull, once I get the double bottom, it's game on, because it's potentially in my mind, even if it may not be true, in my mind, the reversal is formed. Because remember, in my mind, I'm right. I could say, wow, this has been an unfortunate, 3 or 4 weeks, and I can blame all kinds of stuff. Oh, it's Trump. Oh, it's the Russians. It's Hillary Clinton. Great. So then I get to a double bottom and I start buying. And we see what happens, right? Because it's part of my seasonality where I expect this to go up for the next 8 weeks. So, let's get this to 90. Let's make 1,000 pips on this sucker. Okay. But it's not just the Aussie yen, it's all yens, right? So that's part of my analysis. So in fact, if I go to those yen pairs now, you can see there's a lot to it. But remember, the money isn't made because it's moving up now. The money is made because we talked about price moving up for 2 or 3 weeks before it went up. You understand that? Like, it's not somebody scalping USD Swiss franc off of a monthly pivot point and picking up, 15 pips. The money is, hey, this is going down, but it should be going up. So I am getting ready and I am building plans, and this will lead to, hundreds and hundreds and hundreds and hundreds of pips, right? Like this one. Here's a great one, right? The Kiwi yen, we even talked about it, right? I did a big talk about the Kiwi in general, and milk prices really holding it down as of late, and American government buying milk and dumping it down the drain, and what we need is Europe to get its act together so it can buy from China, and China can do this, and blah, 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 that big whole speech. Well, I'm pretty sure you've seen the European inflation data, and it's pretty good. So Europe maybe is improving again. Remember, at the beginning of the year, we had about 4 months of really decent data out of Europe. It looked like they were getting out of it, and Draghi was talking about ending quantitative easing and all this kind of stuff. And wow, then it changed, and all of a sudden Europe was in a world of hurt, and Italy was going bankrupt. And well, that rhetoric's going away again, and I don't know, maybe that is what's happening to the Kiwi. Who knows, right? But nonetheless, if you were a bull, the first trade for the month, and I'm sure I would have had this set up with the swing trading group, so this is one that's failed. But I know if I were me and I was a bull, I would have bought that on force, right? Like en masse. And then, jigga what? Ba-doo, ba-doo, boo, 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 right? You're like, whoa, what happened? Jigga who? Just makes me think of Jay-Z for some reason. I don't know. So anyways, it totally failed. So now you're like, whoa. So what's the next plan? Really, the next plan is double bottom, okay? And look, double bottom. But do you buy a double bottom, or is that degenerate gambling? No, that would be degenerate gambling. So you go back in here, and what did we do? We set it up like an inverse head and shoulders. You see this? Up into the old resistance, down into the old support, and then breakout. The idea was breakout, catch a pullback. Well, it broke out, then pulled back. Well, good enough for the girls I go with. Then up, and then down, and then up, and then down, and then up, and then down, and then up, and then down. Maybe there's some up on this now, right? Could be a rabbit, could be. Okay? But that's where the money is made, where we're thinking up here, I want to buy, then that failed, so then the money is made where you're like, you know what? Next real shot here is double bottom. And then when you're there and willing and able, ready, willing, and able, then you start catching these things like price action and stuff. And you're working your way back up. Okay? Right? Like when I show it to you now, you're like, oh, that is so obvious, right? Well, Raymond, don't tell anybody, okay? Michael says, what's creating the current resistance of pound yen? Well, the British government? Am I allowed to say that? I really feel bad for Carney. He comes in from Canada, moves into the Bank of England. He starts to save them from the global financial crisis. And then they're like, oh yeah, ta-da, Brexit. And I'm sure he just melted. Like, oh my gourd, right? So anyways, that's always going to be a concern, man. So, whoa, Chuck. Settle down, Chuck. Come on. Yeah, what government do you know that's actually good? Right? All right. So, yeah, I think I'd vote for Milton Friedman. Anyways, up. Okay. Can you see, though? Like, really, can you see? I don't know if this looks like the gobbledygoo matrix or can you see the woman in the red dress? Right? This huge, complete collapse. A really good effort to recover. An unfortunate collapse, but it just double bottomed. And now, right, we're back to where we were. The problem I see in a lot of younger traders is that they give up on this move down, right? So I'll have to meet with the swing trading group next week because not on necessarily this pair, but on other pairs, some of the swing traders were like making 500 to 1,000 pips in a week on moves like this. Okay. The question is, what happens to them on this way down when it can happen, and it does happen. It doesn't happen every year, but boy, oh boy, oh boy, oh boy, it can happen. And the most important thing is, how do you behave in this unexpected period? Do you really get the clue train here where your one buy zone collapses? Do you take a step back? Do you chip at it here? Do you take small shots? Do you cut your lot size in half and wait for the double bottom? But even the worst insult to this whole thing is you do really well here, then you lose money on the way back because you just keep forcing the square peg into the round hole, which you're obviously not supposed to do. That's not a trade plan. And then you miss the double bottom because this breaks your spirit, right? This tells you you're the greatest trader in the world. This totally breaks your spirit. And then you miss the recovery, right? Okay. So anyways, basic swing is to buy at this pivot, and it should go up for the entire month. And if it doesn't, it's a kick in the teeth, and you should probably recognize. Okay. And then what's the next step? Well, how about a reversal pattern, right? And here it is. Okay. On an M2 and everything, great. So that's what this week's trade plan was actually, right? So we met on Friday. The whole idea was, up and down or up and down. So either or for you. But the plan was here, and by the end of this week, which is tomorrow, we should be up about here. Okay. Is there anything interesting about that weekly target? That's where bears are going to sell. And there's going to be a lot of bears. Yeah, well, the upside to being wrong, or the upside to being like disciplined and have a very strong opinion, right or wrong, it's good because if you don't have emotion behind it per se, like you have a trade plan, that's it, like up in here, right? Let's say I want to be a bear. I'll tell you what, non-farm payrolls does complicate it, but if I was a bear on this, I would for sure, without a shadow of a doubt, sell up here. I would sell this so hardcore, right? Your head would be spinning. Because I'm a bear, and that is golden. Oh my gosh, I would just sell the crap out of that. Okay, so that's a strong opinion. But if it failed and all of a sudden, we're way up here after non-farm payrolls, well, then I'd really have to start wondering, well, that's a lot less good. Really depends on how much was created from the volatility from non-farm payrolls. So if it came up here and then tried to track itself back, oh, that's a lot less good. So yeah, maybe, but above 75.30, like just I'm taking a walk, right? So like I would just sell the heck out of this, and this I'm like, ooh, not so sure. Up here, absolutely not. Okay, so right, and so that brings you down to like, well, then what about Monday, right? But like if non-farm payrolls brought us up to here, it's still sellable, but it's a lot less good. Okay? And that's the nice thing about having a clear bias and a solid trade plan. It's not that you're right, because you should be right a lot, and it shouldn't really even be that amazing, right? Like you sold it and you made money. Like, well, why is that surprising? You understand? Like when you pull the trigger, you should be shocked that you didn't make money. Now, some of you guys, I think, are still just throwing trades down. Like, oh, look at resistance. Oh, it picked up 9 pips. Woohoo! Okay. But if you have a solid trade plan and a solid bias, and you're setting prices up, let's say at least a day in advance, when you pull the trigger, you expect to make money. And there's a big difference, right? So what do I say in my book? I say in my book that you should take pride in your losses, and you should spend more time on your losing trades to like figure out, well, what went wrong? Did I chase price, or did I not buy at the right support, or did I miss the fact that this was an M2 and that collapses my monthly swing? Because remember, what did I talk about all month of October? Where are we going? Right? Remember that? So I'm like, look, somebody sold, M3. What does that mean? We're going down to M1. That's not bullish, right? So what do you want to do when we get down to M1? Look to turn, right? All that kind of stuff. So anyways, being clear on what you want to do and having solid plans, most importantly, helps you understand when you're wrong, so that your losses are not that big of a deal and you're not shamed. Right? The worst thing that can happen to a trader is they're ashamed. And they don't tell people about their losses. And then what are they going to do? Trade their way out of the losses. No, cliche is my middle name, right? Yeah. So, no, you got it, right? So anyways, I do want this to go up. I do understand that bears are going to sell the heck out of that. So I do need to be careful. One thing I can do in response to my analysis, right? And again, my analysis is telling me up near that little mini X, there's going to be bears. So if I had bought down here, and this is Thursday before NFP, and we're up here at around 74.5, yeah, I just take the profit. Come back Monday, just forget Friday. Go golfing, right? Yeah, Michael, right? Like, yeah, if you don't plan, you just don't understand when you're wrong. And the most important thing, I'm telling you guys, the most important thing is that you know when you're wrong, because you have to have small losses relative to your wins. And when you're right, you're like, yeah, I knew that. I mean, look, you bought a double bottom, really? Right? You bought a double bottom on a Friday at a take profit zone after a higher high, higher low. Like this swing here on Monday, look how easy that was. Right? This is easy, man. That is easy. So like you're not shocked it's gone up for the last couple of days. You waited a week. Right? You waited a week for that. Then you're like, oh, what? Like, duh, right? And that's the whole point is it's not that it's simple. It's that if you had planned that ahead of time, very tradable. And then look at the flip side of this. If you weren't a bull but a bear, look how awesome some of these trades are. M3, right? M3, where are we going? M1, bro. I mean, it's so straightforward. And then down, 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 up, up, sell it at the central again. Down, 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 sell it at the pivot again. Down, down, like, oh my God, there's like one swing. And then this is this is Monday and then Tuesday. Anyways, there's a trade, there's a trade, there's a trade, all in the context of one simple swing. Right? Like, there are so many great little straightforward trades if you had it planned out. If you happen to be a bear, that all of that, there's price action in there, there's pivot points in there. It's just clear. And then now that we're here, you can take it back the other way if you happen to be a bull. The thing is, a lot of people try to be both, and what happens is you start double guessing yourself, and you don't know. You're still a bear or a bear here, so you end up selling here, which is actually quite fine. But you've ignored the fact that you were a bear at a double bottom, and that's not easy. Okay, beast. Somebody wanted beast. Yeah. So you got a tougher question here because it's much more bearish than before. Okay. Now, I hope you guys remember that we've been selling this since up in here. Remember how it went up, moved sideways for 3 weeks, and then we had the lower low, lower high, sell, lower low, lower high, sell, right? Then we talked about this just being a guide, the bottom one just being a guide. Don't buy at the bottom. It's just a guesswork based on the past, but let it keep running, right? And then what? When we get down into here, seems like it might be checking up, right? Are you going to play this as a double bottom, higher, high, higher, low, higher, high, higher, low, higher, high? Well, at some point, yeah, probably, right? How are you going to treat this area? And more importantly, if all you looked at was this pound yen, you would say, yeah, double bottom, and it looks like it's making our high. But isn't it helpful to know that Kiwi yen has already done it? Aussie yen's already done it. Yeah, thank you, Alan. Yeah, guys, if you like, give the little thumbs up thing. That would be appreciative. Also, remind, subscribe so that you can attend future webinars. I'll be at Non-Farm Payrolls Live at FX Street on Friday for the 151st month. Okay. But anyways, guys, it's helpful to see all the yens moving. Okay. And this is just the slowest horse to cross the finish line. That's all. Yeah, off the pivot, but yeah. Weekly and then monthly. Okay. Oh, I missed ADP. Sorry, guys. Oh. That's hot, huh? That's a hot ADP. Oh, Chuck had it. Thank you, Chuck. I appreciate that. Okay. So if you've been trading Forex, let's say for 5 years, you're going to look at the 5-year history of your experience. And you're going to say a big ADP number predicts a big non-farm payrolls number. And you can go back to 5 years and you could look at it and say, dude, the correlation is almost perfectly 1. Every time there was a good ADP number, there was a good non-farm payrolls number. And every time there was a bad ADP number, there was a bad NFP number. So you can say ADP predicts, it has a positive correlation to non-farm payrolls. And you might feel that way, and you might actually believe it, and you might have 5 years of statistics to prove it. The nice thing about trading for 15 years is you know that that's gobbledygook nonsense. And unfortunately, like, I don't read the newspapers anymore because so many of them are wrong. But you probably read things like a good ADP means a good NFP. And then they'll cite 5-year trend is nearly a perfect correlation to 1. So let me tell you the real world. All right. Pop a squat, everybody. Everybody gather around. Uncle Wayne's going to tell a story now. So the reason that the correlation has been high for more than 5 years is because the Fed was manipulating the market through quantitative easing with the expressed goal of improving employment. So they were pumping trillions of dollars in the market to create jobs, and guess what? Jobs were created. But it wasn't a free market of natural supply and demand. It was an artificial market, right? Supply creating demand, not supply interacting with demand, okay? So there wasn't a true equilibrium. So it's like, right, a tsunami of money, if you will. So a normal street has cars going this way and cars going that way, boom, 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 right? Supply and demand, whatever. All of a sudden, tsunami comes in and everybody's going to go that way for a while, and then everyone's going to go that way for a while. But it's not the normal flow of traffic, right? Right, and if you've been through a tsunami, I'm sorry, a terrible analogy, but I was trying to get this idea that there's a bigger force behind it than the normal course of life, of human activity, okay? So, if you go back before the 2008 financial crisis, okay, you had a normal market. Now, maybe it was an overheated market, but you can go back, let's say, 10 years even before that, all the way back to like the year 2000 crash. Okay, so if you look at 2000 to that, that normal period, 2000 to 2007, you would find that based on normal supply and demand, ADP actually had no correlation whatsoever. And we went back, in fact, I had Kurt Worley at the time. He was a quantitative analyst, amazing guy, a solid human being, a great researcher, a great presenter, brother in arms, right? Anyways, I said, hey, Kurt, can you go back and, oh, I know what it was. I saw some idiot on CNBC. And the guy's like, well, ADP means a great NFP, right? And I'm like, is that really true? So I said, hey, Kurt, can you get those numbers for me? And he's like, yeah. So he went back and he got like more than 10 years. I can't remember what it was. It was like 25 years or something, right? Of ADP numbers. No, it wouldn't have been 25 because ADP hasn't been doing it long. But anyways, he went back many, many years of ADP numbers and many, many, many years of non-farm payrolls numbers. And then he crunched it through, your normal quant stuff, and he popped out correlation data. Okay? And he found that there was not a positive correlation, which means if it's good, if ADP is good, NFP is good. There wasn't a negative correlation, which means if ADP was good, NFP was bad. And it was somewhere stuck in the middle, actually, which actually told you that it wasn't like slightly or mostly positive or slightly or mostly negative. There was just no correlation whatsoever. None. So this guy on CNBC, he's like, oh, well, that means, everyone should be buying non-farm payrolls. And I just simply asked a question, is that true? And it turned out, no, not true at all. ADP has nothing, no correlation. Now, you can try to explain it, and that gets more difficult. And why do you need to explain it? But, these are private payrolls, smaller businesses, not bigger businesses. So it's a sort of the Russell 2000 of jobs. But maybe that doesn't affect the overall economy the same way. Or I don't know. I don't pretend to know. But in the last, since let's say 2008 to now, the last 10 years, there's been a very, very strong correlation because the Fed has been creating the jobs out of free money versus the jobs happening organically in a normal market. So as we move back to a normal market, ADP will be less and less and less and less of a predictor of non-farm payrolls. So 4 years ago, if someone said ADP, a good ADP predicts a good NFP, they were almost certainly right. I would say certainly they were right. And now that we're moving to a more normal economy with the Fed removing stimulus, that ADP predictor is probably, well, for sure, less and less and less of a predictor. And those idiots are still on TV going, well, right, ADP predicts a good non-farm payrolls. Oh, yeah, that's so true. We looked at 5 years of data, and it's positive correlated. Right, blah, 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 blah. And it's all nonsense. It doesn't predict anything, Michael. It just is. It's great advertising for ADP. Okay? It's just small and medium-sized businesses that hire ADP to do their checks, do their payroll, do their retirement benefits, and all that kind of stuff for their payroll, for their employees, because it's cheaper than having a payroll department, hiring your own accountants and all your own bookkeepers and all your, so that you just hire ADP to do it. It's outsourcing your payrolls. That's all it is. So you're not going to be IBM on there, but you might be XYZ Corp with, 200 employees. That's all it is. There's a company called ADP. ADP doesn't actually mean another dumb prediction, even though I say, today is another dumb prediction day. ADP is actually a payroll processing company for small and medium-sized businesses. SMEs. Yeah. Oh, my pleasure. What year is it? Oh, yeah. All right. What year is it? And I went through this process of buying big watches. So now I want to buy really small watches. I never wear the big watches anymore. And I lost my Patek. I don't know where that is. I haven't seen it for about 3 years. I can't tell my wife. Don't tell my wife. All right, so here we are. Let's do golden oil and pull the plug. So what I'm saying, Michael, is just because ADP was 228 doesn't mean non-farm payrolls is going to be hot. Now, it probably still somewhat will be, because that is also the trend, but it doesn't, right? So you could just look at the trend of non-farm payrolls on its own. How about that? Maybe that's what you should do. Instead of saying one means the other, just separate the two and just say, what is the long-term trend in non-farm payrolls, right? Let's say, what's the trend in the last 12 non-farm payrolls? What's the trend in the last 12 weekly payrolls, right? Weekly jobless claims. Look at the Challenger Christmas and Gray report coming out. Look at the ISM manufacturing, but unfortunately that's Monday, right? But you would look at the ISM manufacturing employment subcomponent, right? The employment subcomponent to ISM services. You see what I mean? And then look at all that and then make a determination whether you think NFP is going to be hot or cold. Just don't say something stupid like ADP means NFP. Yeah, if you've only been around 5 years, you probably think that's true. Yeah. Which means 5 years from now, you're going to say, damn, this ain't working anymore. I used to make all this money on ADP, NFP, but now it don't work none anymore, right? And whatever, right? This is why you want to be a senior trader that's been around. All right, here we go. Okay, here we are. I set this up for you guys. Is that going to double bottom? I don't know. What are you going to do, son? We had lots of plan A's, remember? And then if that don't work, we talked about the plan B. So how are you going to play it? Well, you're taking on a lot of risk right now. All you have is a bet that it's going to double bottom. So let me go back to that. If you're in it now, all you've done is say, I bet you this double bottom holds. Well, that's not much of a trade plan. But what if you go through, it bounces at what you'd think would be the price for a double bottom to occur, and then it goes through this resistance and then drops back. Would you take a shot that kind of looked like this? Would you take that? Would you take that? See, that's a trade plan. You're like a double bottom with a 1, 2, 3. And you happen to be a bull anyways. Okay? What do you stink? Smell like a plan? Oil still falling. Or is it? Plan A, plan A. Just waiting and waiting. So next week, Iran gets cut off, don't they? Right? So we lose supply, but this is the whole issue. Iran, everybody knew that Iran was going offline on November 1st, right? We all knew that, right? So what do you think Iran is doing? Do you think they cut back their supplies, or do you think they pumped as much oil as they possibly could? Worked day and night, 24 hours a day, 7 days a week, double time, open the spigots, right? And then what about everybody else? They probably did the same thing too, because then they could say, well, we produced a little more oil because we're going to lose the Iranian supply. So this is probably more a supply issue than a demand, but we don't know. But if you wanted to specialize in oil, you could do supply side and demand side analysis. And I would expect you to. Okay? You could see that I want this to go up. Okay? Look where the month started at the top. That's the predicted high for the month of October. And look where we ended. This is the predicted bottom for the month of October. Now, it typically does go from top to bottom. Okay? But it did. And that's gorgeous. That's sexy. That's hot. Right? That's hot, like Paris Hilton. That's hot. So anyways, I'd like to see this come around. Okay? So I might be thinking about buying. But we'll see. Those are the concerns on the table. I think we got an OPEC meeting not far away. Iran gets cut out soon, and so on and so forth. That's hot. And I was thinking about going to Venezuela in January. I might do a trip to the Caribbean and then down to Venezuela. So I talked about maybe 4 or 5 years ago, I talked about going to Venezuela when there's blood in the street to buy some apartment buildings, beachfront property. I think I like me in Venezuela in January when it's freezing cold in Atlanta. What do you think? Just walking around with bags of money. I mean, look, at this point, like I was reading something about people are trying to get out of Venezuela, so they need to like renew their passports or something. And it cost, what was it? It wasn't a lot of money. It was like $2,000 or something. And it was something like 6 years of income. What? What? So can you imagine? What would $10,000 buy you? You're like, you know what? I want a parade. I've always wanted my own parade. All right, everybody gather around, start throwing around $10 bills. We're going to have a parade today. I want floats. I want marching bands. How much for a marching band? $12? Boom, 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 boom. Let's go. I want the drums and I want the trumpets. Let's go. Why not? Let's have fun, man, everybody. Yeah, well, Joe's like, isn't Venezuela like Mad Max? Yeah, but that's when you buy, bro. So anyways, I don't know. I'm being quite facetious. But yeah, it might be, maybe it's an opportunity to buy beachfront property for a discounted price. And I can sit on it for 25 or 30 years. And when I'm 75, I'll sell it for like a crazy, ridiculous profit. But in the meantime, I'll have about 30 years of like, I can every winter go to my South American beachfront apartment building and the whole top floor will be my apartment. Next door neighbors will be oilmen from Shell and from Exxon and from BP. So I'll be surrounded by Americans and British and Dutch because they're also going to want multi-million-dollar apartments because they'll be in Venezuela fixing the infrastructure that Venezuela has neglected for a couple of generations. So yeah, so who are my neighbors going to be? Not Venezuelans. I'll be the king of kings, but not that king of kings. But you know what I mean. Anyways, that's my thought process. You know, yeah. You want to be filthy, stinking rich? Like take $1 million and move to Venezuela. I mean, just imagine what kind of life you could possibly live if you had $1 million living in Venezuela. You're like, how much is this 20,000 square foot house? Oh, you know, that's 100,000. Boom, 100. Now you got yourself a mansion. How much does a gardener make? $1 a week. Great. I want 5. Yeah, I want 5 bodyguards. Like whatever. But you know, again, I'm making light of a very serious problem, so I don't mean to do it. But there is a currency crisis. Okay, we can agree to that. And there's an economic crisis and there's a political crisis. Eventually, Venezuela needs to get out of this situation. And it's going to be foreign direct investment that's going to do it. So we need to get rid of the entire government. Now, that's not up to me, and I shouldn't be saying that if I'm going to show up with suitcases full of money, because these guys will probably kill me, right? So, all right, maybe we keep the government. But there needs to be sweeping change. Venezuela needs to rebuild its infrastructure, faux show. So they're going to need to let foreign oil companies in to rebuild all that infrastructure. Right, we probably need to rebuild all the social infrastructure and stuff as well, and all that. And so all this money needs to come in to rebuild things. And then over time, as the rest of the world learns that things are improving in Venezuela, then things like more more money, more people, more assets start to move to Venezuela because now the worst is over, but the prices are still cheap. And then you have this sort of recovery period. And there's lots of different models you can put over there, over top of this kind of situation. But someone has to make the first move. Okay? You know what I mean? Someone's going to have to make the first move as far as investing. And that person takes on the most amount of risk, but that person will also make the most amount of money. So there's that situation, but I'm pretty sure Venezuela has beautiful beaches, don't they? And when it's freezing cold in America, I could be down there in the middle of summer on a hot beach, smoking cigar. See, if I go to like Cambridge, Massachusetts and smoke a cigar, they'll arrest me. Right? You go to California, smoke a cigar. I had a guy in spandex come up to me. Hey, do you mind? Like, what? I'm walking down the freaking sidewalk. I can't smoke a cigar? Change your clothes. Do you mind? You're gross. So anyways, right? I could probably go to Venezuela, smoke in a restaurant, and they're like, oh my God, thank you for coming to my restaurant. Yeah, you're welcome. You got to find a socialist big talk country to do what you want to do, because in our democracy, you can't do what you want to do because there's so many rules. What a weird place we are. So anyways, peace on earth. May the pips be with you. May your profits be above average. And I will see you guys tomorrow. And love life, live large. See you then. Remember, please subscribe. Please thumbs up. And if this is a recording that you're watching, please leave a comment. I really do appreciate it. And somebody sell some Microsoft stock. Short sell those. Anyways, I like you. I thumbs up you. I'll see you tomorrow.